Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and we're back with our annual Singapore Fintech Festival coverage organized by the Monetary Authority of Singapore. The Singapore Fintech Festival is on its 6th edition, and we're proud to be a media partner for the 4th year in a row. Joining me for this segment is Chris Brankin, CEO of TD Ameritrade Singapore. Chris, it's great to see you as always. Welcome back to Trade Talks.
Great to see you. Like I was saying earlier, wish it wasn't virtually. Fingers crossed for 22.
Yes, looking forward to being on the ground 2022 with you. Always my favorite interview. Tell us about TD Ameritrade Singapore, how you see the Singapore APAC retail investing environment evolving.
Well, look, this is something that has continued to evolve over a last number of, it's a decade in the works. We've always been this kind of, we'll call it this context-rich company, where we have tons of content, tons of material, and we're kind of in this content-starved environment. Where people are searching for education, partners, and all these different things. And right now, I'll tell you that, from what we really, it's part of our DNA, from Chicago originally with Thinkorswim, was education, not only around strategies, but platform education. And there are more tools and things available to the retail customer than there ever were before. And one of the main things that we removed last year, so last August, we removed, in Asia, the commissions for stocks and ETFs. So we removed that additional barrier. We provided more tools and content to our customer base. And what we are doing is we're revamping again our education center. So we're looking to add additional content. We're adding about 20 pieces per week, not only around strategies, trade ideas, but also in terms of how to use our trading platform. So it's something that we see our customers asking for more and more. And it's something that we want to be able to provide to them.
And we're halfway through earnings season in the US. Any takeaways from that?
Look, this is, hey, blue skies ahead. No inflation and earnings are great. Might be a little oversimplified at that. But look, we're almost like 60% of the way through earnings season right now. We've had earnings per share beat, around 82%, revenue, in the mid 70s. So all things from an earnings perspective look pretty good. Now, what I like to pay close attention to and what we see our customers here at TD Ameritrade Singapore is two things. And one thing that I think is very important that I think gets overlooked a little bit is the overall trend in earnings numbers. So if you just go back 30 days, we've kind of revised up earnings about 10%. So we've gone from about 27% expected earnings beat to 37% just in the last few days. So that trend is definitely headed in the right direction. So what we pay close attention on that. And the other thing is when we have these increased earnings expectations, the companies that somehow don't live up to that expectation or miss earnings, those are getting punished significantly. And I think if you look at Peloton last week, you saw that they missed earnings and they absolutely got crushed. So you have to pick when we have these raised expectations and when companies do miss earnings, that is something that they can get overly punished for on their price per share here in the near term.
Right. And we cover in the US the TD Ameritrade Investor Movement Index, or what we call the IMX, each month. And we discuss net buys and sells. In the APAC region, what are you seeing with clients in terms of what they're buying and selling? Yeah.
So look, so we have, we'll call it the Asian IMX that kind of covers what our Asian customer base is trading in the US. So we've seen our customers very similar in terms of overall, in terms of their breadth and net new buying. We've seen our customers partaking basically over the last 12 months, every month except September, they've been net new buyers. Some of the differences that we see, and this is something that has been literally for the last 9 months in a row, our number one net new buy for our Asian customer base has been Taiwan Semiconductor. We also seen ASML Holdings, Johnson & Johnson, as some of the big net new buys that we see our Asian customer base participating in that our overall population is not. Some of the net sells we see in Asia, kind of Unity Software, a couple months in a row now. We've also seen Advanced Micro Devices. And then for the second month in a row, Snowflake Inc. So it's something in terms of, we'll call it, maybe some of these newer stocks that are less Asian centric, that are more US based, that we see some of our customers here selling more actively. Some of the big names that we do see buying across the overall population are some of the big tech names, like Apple, Nvidia, Microsoft. We also see Walt Disney as one of the big net new buys. Hopefully, something that, my family and I are able to get Disney again in the near future as travel opens up as well. Also on the sell side, we see some of the similar things that we see in the US. We see Tesla Bank of America, ExxonMobil. I think on some of those there's been some profit taking as we've seen oil and maybe interest rates or inflation talk kind of peaking some of the bank stocks as well. So something that we're seeing across the globe and here locally across Asia.
Right. And Chris, off air, speaking of travel, we were talking about how big the FinTech Festival is and the enormous complex that takes place every year. I think last year and the year before, we were looking at over 60,000 participants on the ground, at least before COVID. What are your thoughts on Singapore evolving as a FinTech capital, if not the FinTech capital?
Well, look, I mean, look, you ask someone here in Singapore, so this FinTech Festival is the world's largest. Singapore is becoming the hub for FinTech. For those of you who've never been out here, the Singapore Expo is this amazing space that's massive in terms of the number of people that are able to participate throughout the week-long event. But this virtual event is just mind-boggling. The number of countries, you've got 130 plus countries, gets over 700 speakers. You have 7,000 different companies. So lots of kind of we'll call it opportunities to learn more about the FinTech space. And for those of you who aren't familiar, what exactly kind of is covered in that FinTech space? Look, that's everything from brokerages, finance, payments, Bitcoin, blockchain, lending, robo advisories. This covers a large space, and Singapore is forefront at the center of a lot of these things. And I think this is a great opportunity to kind of, we'll call it, look at the overall landscape and hear from some of the leaders across, this different FinTech globally that maybe we wouldn't be able to get if it was only held here locally here in Singapore.
Right. And I bet you the virtual component for that reason doesn't go away, because then you diversify the investor base the company is presenting. FinTechs are young. They might not have the money to get to Singapore. So it just opens up the opportunities that everyone has. So I think this is here to stay. And to wrap up here on the Singapore theme, they're opening travel lanes to Australia, Switzerland, bringing the total to 10 new and 12 total. What does this mean for global economies in some specific sectors?
Well, look, this is really important to me, especially since living here with my family. Is as we see the global economies open up, this is nothing but positives, for everything from e-commerce to travel to hotels to food and beverage. But one of the things that I think is most closely correlated, and you've seen it been going up significantly over the last few months, is the price of energy and more specifically the price of oil. So as we see economies open up and we see that demand picture, so this is something we've seen our customers actively participating in. We've seen oil over the last few months kind of go parabolic up. We're at 8-year highs in terms of where the underlying WTI price is. But some of the stocks that make up that sector have not followed suit, so to speak. But over the last couple of months, we have seen some significant buying in terms of some of the oil majors and some of the the drillers, along with ExxonMobil, Chevron, Halliburton, and Schlumberger. So it's something to pay close attention to as the world economies open up. That demand picture should drive and continue to support those oil prices and hopefully that energy sector as a whole.
All right, Chris, hope to see you next year on the ground. Thanks for joining us on Trade Talks as always.
Pleasure. Thank you.
You got it. Global Markets Reporter at Nasdaq.